It's just gone 10:01. Still more people joining. It's a really awesome crowd on the line. We're heading towards 300 odd participants. So a very warm welcome. Just to frame it up, this is part of the FSC's Connect series. Obviously, we've been living through times none of us thought we would ever do, and we've all had to respond as we've merged our personal lives and our professional lives and our dining room tables and our dogs and our kids and our cats and so forth. One of the things that we've been doing through the distribution committee of the FSC and the working groups that sit alongside that is determining what's the best way in which we can support our members more broadly, and certainly the best way to support the advice community who obviously are being, as all of us are, locked up and locked away at a time when arguably consumers need good quality advice, good quality coaching and guidance as much as any time ever. So this is the first of the 3 sessions that are almost a reprise for those who attended the Get in Shape sessions that we ran in February, which almost seemed like a lifetime ago. And it's really about helping to understand and to navigate through the crisis ahead, particularly as reg change has now been pushed out. And so delighted today to have an esteemed group of experts from around the sector and around the marketplace, not only in today's session, but you'll see some comms go out. We'll have a session next Tuesday and another one next Thursday. Treat them all as a package. They are a lens on what's the strategic issues today, what are some of the advice issues on Tuesday, and what are some of the governance and compliance issues for next Friday. So that's a little bit of a frame up. For those who are new to Zoom, Russell's going to encourage you, use the chat bar. There's lots of chat going on already. Use the Q&A bar to ask questions. We're in for a treat, and we're going to be together for the next 40 odd or so minutes. So thanks again for joining. Thanks to the panelists, and I'll hand you over to the very capable hands of Russell Hutchinson. Russell.
Thank you, Richard, and thank you to the FSC for putting on this event. I'm really excited. We've got a great panel with us today who can help talk us through what those strategic issues are that we're facing, since the environment has changed so much since we last got together for Getting in Shape. So a brief introduction to our panel. We have Tony Arthur, who is Chief Commercial Officer, Partners Life, and also has many executive years of experience in banking as well to bring to the session today. We also have Tricia Edmonds, who's Head of Distribution Funds at ANZ Bank, ANZ Wealth, in fact, and brings lots of experience working with advisors and clients, vital to the environment in which we find ourselves today. We also have Tony Vidler, advisor coach, former submariner. No lockdown can conquer Tony's spirit, and so it's going to be great to have him share with us. And we have Tony Dench, CEO Share Professional Advice Group, bringing together some of the leading financial advice businesses as well. For our audience, thank you very much for coming along, and it's great to have you with us now. The way this panel is going to work is that I'm going to set up with some introductory questions, but roughly half of our time is going to be based upon the questions that you're going to ask us. So if you can have a look near the bottom of your screen, there's a Q&A button there. As we go through the first part of the session, if you'd like to pop down in just a few brief words any key questions that you'd like to have me put to the panel for you, then that would be fantastic. It's going to make the session work really well. Obviously, our setup is the COVID-19 crisis, and this is different perhaps to other purely economic crises that we've worked through in the past. It's similar to some in the sense that it's a big external shock, like the Canterbury earthquakes. There's a strong behavioural component. There are things that we're being asked to do in terms of how we interact with each other and the business that we can do, which are going to affect us not just during this lockdown period, but possibly for as long as the next 18 months. And it's got a global dimension as well, which is affecting the markets in which we operate and our trading partners and so on. So the story has been unpredictable so far, and there are likely to be some more big ups and downs as we go forward. So with that context, I'm now going to ask the first of our panel, Tony Vidler. Would you like to kind of take us through some of the big sort of issues that have emerged over the last 6 weeks, and what you think might emerge in the next little while?
Okay, thanks, Russell. They're quite big questions, so I'm going to rattle through them fairly quickly and then just try and deal with any questions that might come out of them later. I think in terms of the big themes that I've seen evolving over the last month or so, particularly in the advice space, has been the commercialisation of advice businesses. They've often been in the past sort of run reasonably as a lifestyle business. And now they're having to learn how to manage their staff better, leverage technology, redefine their value proposition, engage with clients in different ways. There's a rapid commercialization of the advice businesses going on at the moment. I would also say that there is probably quite a significant strategic reassessment going on in advice land. And there's a number of catalysts for that, from supply companies having quite different consumer assistance policies through to some of the product changes, REM changes, things like that have been getting announced. We're starting to see the new agency agreements come out, and these are all issues that are causing advisors to reassess some of their positioning, who they want to partner with, perhaps what their positioning is as a business in the regulated world. So it's been a bit of an odd time, and there's been a lot of strategic reassessment across most of the advice businesses that I've seen. But I think the other big thing that comes out in advice land is a real leaning towards a broadening of their service offerings. The specialist advice firms have suffered the most over the last month. You know, the people who only do mortgage broking or only do investment advice and so on have had the hardest time of it. And the more holistic businesses have had an easier time of it. And most of the specialist businesses that I see are now considering how to broaden that service offering. So that's sort of what's happened in advice land over the last month. In terms of what should happen now with the regulatory timetable changing, I think there's a golden opportunity for practices to embed behavioural change. And behavioural change is a really critical part of getting your positioning right in the newly regulated world, because it's not just a matter of having a great process which stands audit scrutiny. You have to have the right people doing the right things inside your business as well. So we've got a time frame now, which, if you like, is a wonderful transition. Where you're not going to have regulators bashing you up along the way. So if, for instance, a practice was ready to run as a FAT by July, they've got a solid 6 to 8 months to make sure they've got the right habits, right behaviours, right systems actually working inside their business before the regime goes live. I think another area that advisors and product manufacturers, suppliers need to work on over this next 6 or 8 months is where the demarcation lines are between coffee and FSLA. And by that I mean, clearly the suppliers have good client outcome issues that they have to resolve as well. That's a bit of a new line of thinking for many advisors, and advisors need to sort of shift their thinking and get their heads around it, that, the suppliers do actually have an interest in what happens with the consumers. And figuring out where those demarcation points are between establishing suitability and defining what a good client outcome actually is a body of work, I think, that needs all participants to work on together. That's a key thing. And the third thing that I would throw in there for advisors is that they really want to use this next 6 to 8 months to ensure that they are top of mind for the client. We've seen in the main, advisors have really elevated their communication levels in the last month. They've improved engagement systems and strategies with their clients. And as I said earlier, they're starting to broaden that service offering. So over this next 8 months or so, I think there is a real opportunity there as well for the advisors to leverage the work they've done in the last month and to strengthen their position in the client's mind as the person they turn to. And that requires ongoing elevated levels of communication and ongoing investment in the software and the technology that enables you to communicate en masse, but in a personalised way. So the third part was the how we can assist consumers in New Zealand in relation to their financial advice needs. Well, my first one would be aimed at the government. If the helicopter money that they're all talking about does come to pass, aim it down at the socio-economic level that normally doesn't get to access advice, and provide some genuine financial planning opportunities for those people to try and change their worlds, change the literacy, change the outcomes that they get. I think that we need to think about our products. I think redundancy cover and some of the cash management products that have been showing up a little bit in the last month, and we probably need to go back and have a look at some of those offerings in the future. And we also need to get business interruption, business overheads, risk management tools like that firmly on the agenda with SMEs, and we have not done that well as an industry. And my third and my pet thing, anyone that knows me and has heard me talk in the last few months anyway has heard me talk about this before. I really think we should be pursuing a pro bono project as an industry as a whole. Simple maths. If the industry as a whole committed to, helping one client per month each, you've changed 40,000 households in a year, and that's huge. And I think that's a massive opportunity. So they're my sort of key takeouts on each of the three key questions, Russell.
Fantastic. Thank you, Tony. And that's a really good opportunity for us to I'd like Tony Arthur, if you would next to reflect on those big themes, but one which I just thought would be good to pass to you is the question of how to use this time well. And I know that you talk about keeping the momentum going. And another one is that issue of consumers and the economic effects, and you've talked to us a bit about that in the past when we were preparing for this. So if you could pick up on those, that'd be great.
No problem, and thank you for involving me, and just want to say good morning and welcome to everybody who's on the webinar. I will get to those questions, Russell. I'll just probably just cover off a couple of thoughts that I had around the big themes, because I think they naturally flow into the questions that you've asked there. So I guess a little bit like Tony, I think one of the things that I've observed over the last 4 to 6 weeks is an absolute need and desire for accurate and timely information, that when you're responding to a crisis and when you have the amount of unknowns that people are dealing with in a time of real flux, I think we have as an industry responded the best that we can, but I think there is a huge need and desire, and to be blunt, I think there will be a lot of learnings around the importance of being able to provide as accurate and timely information to advisors so that they can be clear and provide accurate information to your clients during these times. And it's always going to be an imperfect process. Nobody ever understood nor could envisage the way that COVID and the subsequent restrictions on us all have flowed out. But one of the really big things I think that we will need to contend with, recognising that we're in a period where we're still going to be dealing with a lot of unknowns, looking forward to level 3, but in reality, what that means for how consumers and clients want to interact with us. And then when we get beyond level 3 to hopefully level 2 and 1, what that means, I think we will all take on board learnings around being able to recognise the importance of getting accurate and timely information out there. The other, big theme that I've seen is real variation, and it's no surprise, but the real variation and therefore the impacts of businesses' ability and readiness to cope with rapid disruption. And I know the context of this is COVID, and the context of this is some of the regulatory change that we're looking at, which has been pushed out. But I think everybody on this phone call, whether you have a formal BCP policy in place or a procedure, you've enacted it. And there is much around the coming regulations and requirements over the next couple of years that we will need to adapt our businesses to. But in many ways, businesses that have done some of that planning, I'm certainly observing in a position where they not only had to reimagine the way that they were working and operate from home to deal with the rapid influx over the first 2 or 3 weeks of responding to customers, but actually, I think as Tony Vidler pointed out, how they start to think about their strategy, their value proposition, and really importantly, what are the opportunities that we all have in dealing with this crisis that we then fold in and make a central part of our business. The third big thing that I'd just touch on in terms of themes that I'm observing, new ways of working. I'm sitting here in my kitchen talking to a laptop. I have my diary, as you will all have. It's been full and, to be blunt, frantic over the last 4 weeks as we've moved home. But we are all now using technology via the disruption we've faced in ways that we would never have imagined. And I think for the clients that people have been looking after and caring for during this time, and in fact how we continue to care for and grow businesses, leveraging technology and thinking about our value propositions and the services that we offer through to clients via, for instance, technology, should be a profound way that we can think about long-term changes to our business, which is good for customers or good for clients, and also drives efficiency and effectiveness into businesses. In terms of using the time well, there are, most of the people on the call here will be business owners. I'm not going to get anybody to suck eggs. Obviously, cash flow is king. I utterly recognise, because we've felt it as an insurance provider, the first 2 to 3 weeks following level 4 was all around responding to clients, and for us responding to advisors and making sure that we can be as clear around any of the changes or conditions that we're operating with to the advisors, so that you can pass that on to your clients. I think what I've observed over the last couple of weeks, people have now turned very much into, say, now how do I run my business? And I think people should resist the urge, and I'll use regulation as an example, resist the urge to kick the can down the road. We are living in unprecedented times. We're being forced to adopt new ways of working. And as I've touched on before, there are opportunities in a crisis, and there are opportunities all around us. And I think how we think about how we prepare our businesses for coming regulations, how we take advantage of some of the changes that we've all had to adapt through this process to make sure that for your clients, but effectively for your businesses, you can get back up and running and getting the blood flow vis-a-vis cash flow going again, and make sure that when we go to level 2 and level 1, we don't lose the improvements or the opportunities that have been created through this. The last one, the question you asked around managing the economics, I think we're incredibly fortunate in New Zealand that, hopefully, touch wood, we're dealing with economic consequences of COVID as much as mass social health ramifications. Yes, we've had some unfortunate deaths, and there are still people that have COVID and are hospitalised today. But when you look at the trajectory of our country versus others, we will be managing the economic consequences. And I would encourage everybody to think about, as we head towards level 3, and as I say, hopefully 2, the way that your clients will need you. We may see another wave of responses as businesses start to open up again, and as some of the challenges with them reopening and their cash flow requirements and the possible both positive and negative consequences of that to their viability, I would expect that we will see a second wave. So managing the economic consequences, Russell, is going to be here for some time to stay. And with that, I'll probably hand back to you.
Super. Thanks, Tony. And maybe, Tricia, if you could explore more of those strategic impacts from an investment perspective, that would be fantastic.
Sure, thanks. Morning, everybody. I guess you said right at the start, Russell, it's very much like the Canterbury earthquakes, and I guess as a Cantabrian, I was part of that. And then I thought about, the GFC, and it's very different from the GFC. I mean, the GFC was quite slow moving. This has been a direct hit on everybody. Canterbury earthquakes, yes, Cantabrians and surrounding areas, but this has been a direct hit. And so what am I kind of observing at the moment? The thing that I'm seeing, and I guess this comes from being a provider, is that the advised clients that are out there are the clients that are being less emotive, less reactive, and are actually taking the opportunity to spend time with their advisor and talk through their situation. So I think that is an absolute big tick plus for us as advisory community, that we're doing a great job with that. What I'm seeing is clients that have not got an advisor are panicking, are being emotive. I went to our Sylvia Park Contact Centre a couple of days before we went into formal lockdown, and I had the privilege of listening to the team in action and listening to some of the calls that came through. And the 3 that I listened to, reconfirmed to me that our levels of financial literacy in New Zealand are incredibly low and need urgent attention. And we've all talked about that. So I guess that sort of segues into what is something that we as a sector can be doing. We need to concentrate more on this financial literacy side of things. And just the fact that the three people that the calls I listened to were totally dismayed. They were all about crystallising losses. They were wanting to switch and transfer their funds, wanting to get their money out, total reactive environment, and very, very, very sad. So that's one thing I've seen. Advised clients, so well done to the community that have done that, and picking up your phone and talking to your clients, it's worked really, really well. The other thing that I'm pretty impressed with, and I think a lot of it, and I think you said it, Tony Arthur, it was around invoking your BCPs. That's been fantastic. Advisors have been very agile, and I know in the first sort of 24, 48 hours, work was around making sure that our BCP works and also making sure that we're connecting with our clients. So I'm very impressed in what I'm seeing there, that the trend was straight away, and the theme was straight away, let's get our business sorted really quickly, but let's continue to keep on engaging with our clients. I guess some of the issues that I think also, in this investment environment is that the conversations are going to be very different now. We're talking about behavioural conversations, and the conversations with your client are very different. They're going to have to be very honest conversations because a lot of people's situations and circumstances have changed. There's a real fragility out there. Words like debt are going to be top of mind for people, and debt brings fragility. We all know that. There's going to be, what are your savings capabilities going to be? Why you should not cancel paying your insurance premium. So they're the conversations that we have. They're basic stuff, but they're the conversations that are going to be very honest conversations, and they need to be made with clients because, I think now as a provider, we've seen things have calmed down quite a bit now, and the contact centre's not as busy. There's been less transfers and switches, but now it's reality, as Tony Arthur said, we're in an environment now where there will be a second wave. There are terrible effects that will come from this, and we need to keep working and talking with our clients on that. The other thing I think, interestingly enough, with technology, it's been an adapt or die situation. There's this new, next generational systems, if that's what you want to call it, have come into play. And we've all worked really, really well on those. But the one thing I've also observed is, and I talked about it with my leadership team yesterday, was the amount of people that are now dialing into these type of webinars, these type of calls. All the providers, suppliers, advice community have been arranging things, and the numbers of people dialing in have been incredible. And maybe this is a new way that we're doing things now. People are not having to get in the cars, not having to find car parks, not taking 3 hours out of their day for a 1-hour meeting, whereas we can all dial into this within seconds, and we're all part of the community and we're all getting it all at once. So, technology is an important thing as well. But, more than ever, there is a need for advisors and advice. And that's the thing that we as a sector need to be encouraging. We need to be encouraging people to come into this community, or professionals, or whatever we want to call ourselves, because actually we do so much for the consumers of New Zealand. And so we've got a big role to play in encouraging people to come in and be the Tonys and be the advisors and whatever. And I say Tonys because I'm surrounded by them today. But that's what we need to do, because our New Zealand public and consumers need that. And as I said, it goes right back to financial literacy levels being really low. So we've got an awful lot of work that all of us can do it. And my last point probably would be, is what I am saying is that we are all working together. It's no longer a competitive space. It's let's work, let's collaborate, let's engage. And we're doing that really well. And we must not stop doing that post-COVID, because there will be a second wave and a third wave, and they'll come in different ways. But if we're working together in the interests of the consumer, And that's what I'm seeing at the moment, and I think that's fantastic. I'm seeing advisory groups reaching out to each other, asking for assistance, sharing ideas, and that's absolutely fantastic. So I guess that's my take on it for the moment, Russell.
Awesome. Thank you, Tricia. And we're going to hand over to you, Tony, to talk about also some of those strategic issues that you're finding, what advisors are telling you, and perhaps you can expand also on what we mean by a sort of a second wave of effects that both Tricia and Tony Arthur have talked about.
Thank you, Russell, and good morning, everybody. It's great to have the opportunity to chat to you. Maybe if I think of this in terms of the last 6 weeks and look over the shoulder, and then look in terms of that second wave over the next 6 weeks and what that might bring. I think it's very clear that the human isolation that lockdown has brought to us has really accelerated a number of changes that were already underway. And the first of those is client related, and I'll start with the clients because it's the right place to start. Consumers and clients are forming judgments at the moment about how firms and businesses are behaving during this time. Relationship is much more important than transactions at the moment. And obviously we're all getting used to digital enablement and operating in a digital way, and we're all doing that right now. So those are the things that I've seen really come to the fore over the last 6 weeks, and I'll get into those in a bit more detail. But first, in terms of the next 6 weeks, cash flow is going to be absolutely critical. In advisor businesses, we will see cash flow start to bite. And then advisors will be able to think, okay, well, what now? What is the response that's required? And consulting widely and listening to others' views and opinions is really important in that piece. So in terms of the emerging trends, trend one, the clients are taking note and forming judgments about what happens when the chips are down, when things get a bit tough. Who stood by, who helped, and who got in the way or tried to take advantage. And I think if I look across the sectors that we operate in the investment space, the investment sector was very clear with a message to the clients. You're not day traders, you're in this for long-term investment. So sit tight, keep going, and guess what? There may be opportunities through all of this as well. The banks also were united in their response, that overarching response, to say to the clients with mortgages, we can help you through. We can find a way to keep going with all of this. Mortgage is a long-term transaction, and we can find a way through. I think in the insurance sector, the response was a little more fragmented. And a little more company specific. I don't doubt the good intention, that is absolutely there to help the clients, but I think there's still an opportunity for a united overarching message from the insurance sector to clients that says that insurance is also a long-term strategic protection transaction, and that you're not alone. We can help through this. So I'd like to see a united front across that. If I look to advisor groups and what they're able to do in this, I think advisor groups are showing a great ability to connect people. The social isolation, again, is something that advisors are struggling with. So the ability to connect with one another and again, feel like they're not alone. And the advisors to get in touch with the clients. So there is huge value in picking up the phone to a client and just asking, hey, how are you doing? How are you coping during this time? And that may not be a particularly specific advice call, but it's really just the human element of that transaction. And that brings me to the second trend. Relationship is more important than transaction. The recent past has shown a focus on production, on new business, and now there's a real move towards customer service. And also to full service across a client life cycle. And I think that's a trend and a change that again will accelerate. The mantra of spend a bit less, save a little bit, and protect yourself, I think is one that will serve very, very well through all of this. Protecting that relationship is crucial because clients have got options. And if there is no relationship, it's very easy for a client to get the product online. And there's an enormous amount of research that shows that advice really does matter. and what advisors do matters, and the clients get a better result from working through that. So that leads me to the third trend, which is the digital enablement. We're all a bit stuck at the moment. And digital enablement to maintain that relationship with the client is a way that is to do that. So everyone else has talked about digital enablement. We all know about it. I think a key piece to focus on is the data quality. I think advisor CRM systems might come under a little bit of scrutiny just at the moment. Are we all able to get in touch with the clients, or is the paper file still stuck in the office? And I hope it's the former, not the latter. Now, looking forward, cash is king. Cash is absolutely king. The business finance guarantee scheme is really struggling to find traction. And I think that's a thing that can help advisors through the cash flow challenges that they're going to face over the next few months. So that business guarantee scheme mustn't get stuck in the mud. We can't let it. We've got to help. Some advisors have been wavering about whether or not to stay in the industry. This is a time for commitment. I'd encourage make a decision. And if your decision is to stay, commit and keep going. What do we do going forward? That is a challenge, and I don't know the answer to that, and I don't speculate that anybody really does. So I've been working with the share board over the past week and a half. We've been getting together on daily 1-hour sprint meetings and inviting guests as widely as possible, as we possibly can, from onshore, from overseas, from different sectors, to listen and hear and consult widely. And I encourage other advisors to do exactly that. Consult as widely as possible and distill those ideas and see if that can find a way forward. It's worked very well for us.
Cool.
I'll hand back to you there.
Awesome. I've got a couple of detailed questions I want to go to from our audience. Tony Vidler, would you like to talk about the new timetable for implementation of FSLR?
Well, we don't actually know what the timetable is. All we know is that it's early 2021. We're all sort of assuming that it's probably something like the 1st of March, but that's not set in concrete, and we're yet to find out really. But I would just suggest that the best move for everyone is to continue as if the timetable was the timetable we had before lockdown.
And what would you say the most, perhaps, pass to you, Tony, what's the single most important thing that you could be doing with this time in order to get ready for that implementation?
I think it's spending some time documenting the business practices that your business has today. I mean, there are many tools, support programs out in the market that can be freely available. There are people externally that can help support your business to start the documentation process. And I'm not talking the advice process here. I'm actually talking about how your business runs. Trish and I have spoken about BCP policies. It's my absolute view that when we get to full licensing, requirements for advisor businesses will require businesses to be able to show, not say, how that business operates. And there will be requirements around how the business is able to sustain challenges and disruption in some ways, not because of, but like what we've faced here. So how does a business make sure that it has enough reserve cash flow, that renewal streams has been a focus, so that, as I say, we get to a period of disruption like we've faced, and businesses have the ability to continue to invest. But I really think, Russell, a key part of it at the moment is balancing and not making it the sole focus, but as I said earlier, not kicking the can down the road and beginning the process of week by week thinking about your business and beginning to codify and write down what some of those key processes are and identifying where there are gaps.
Fantastic. One of the questions from the audience is, what are the specific forms of support available? And one mentions the MSD support. You've already mentioned the business loans. Can you just quickly take us through a list of what's available in terms of support, perhaps, Tony Dench?
Thanks, Russell. So the wage subsidy is something that has, it lasts for 12 weeks currently, unless that's extended. And the wage subsidy is something that a number of advisor businesses and some of the groups have applied for where they qualify. To get that, you've got to have a 30% drop in revenue. And I think for some advisors, that's very easy to demonstrate at the moment. So I'd encourage you access that if you possibly can. It's very straightforward and easy. A more complex way to tackle it is the Business Finance Guarantee Scheme, and that is a government-supported loan. Again, it's relatively easy to apply for, although actually qualifying for it and getting it in place takes longer. It's taking time, and it's a little more complex. And that's where I have a concern that some firms might not be able to hold their breath long enough to be able to get that in place. And I think we all have a role in making sure that that's not the case, and we keep advisors through. So those are the two main sources of support, I think.
Fantastic. And of course, there's, in addition to the wage subsidy, there's a self-employed version of that as well, which is, another dimension of being able to get immediate assistance. And so maybe just open it up to you, Tricia, and say, what do you think the most important things are that the industry should be doing right now to help people?
Look, I think it is, as I said right at the end of my my session, was that, we've got to continue working together. And I think, Tony Dent, you were talking about doing your sprint sessions and getting everybody involved, getting as much consultation, getting as much degree of input from everybody. I think that's really important. We can't be all going off in different directions. Find out what that core is. And the core is that people need advice. Advisors will need support. So, what does that support look like? Ensuring that the providers and the suppliers are providing that support and it actually hits the mark. Because again, going off on different tangents is just not going to work. And I think sharing the discussions and I heard someone say the other day, one of the most important things is, let's talk about the positive stories that have come out of this, because in fact there are some positive stories, and it may be that you've had to put in a claim and that claim has delivered. You've had a savings program in place and it's seen some market volatility. You understand the risk and return, but you've stuck with it. So I think we've got to remember that we've got to have a balance here, that this is tough times, but let's also share about what's happening positive and share that wider. Post-COVID, there will be some stories that need to be sung from the rafters. So let's do that.
Nice. And we've popped a link in the chat where you can get some of that financial assistance. I'll turn over to Tony Vidler. Can you talk about the issue around recruitment?
The question around whether or not a new advisor can practice without level 5 certificate, I think was the specifics.
Yep.
Bear in mind, I'm not a lawyer or a regulator, but that requirement was triggered by the implementation date of the new regime. And if the implementation date has been pushed out, it follows that regulation interpretation would be pushed out as well. Now, we don't have any guidance on that at the moment, but I think that's a fair interpretation. I stand to be corrected or challenged, but I think that's probably not an issue until implementation date of the new regime.
Fantastic. Perhaps one last word from you, Tony. Arthur, what else should the industry be doing?
I think I go back to the comment I made around communication. I think, and it's been mentioned on here, and I've seen a couple of questions, it's been really bloody difficult for certainly those in some parts of the advice sector, getting clarity around the providers that they use, where they're standing on particular matters when it comes to underwritings, claims, premium holidays, suspensions, etc. I think we are going to continue to see flux. We're going to continue to see things that we, can't envisage or forecast today, and we're going to have to respond to those. And, I certainly take accountability for my part, but I think all the panelists, our ability to be able to provide timely information so that people can make decisions and get information through to clients is absolutely critical. And I would just simply encourage, nobody needs anybody to start quoting people, but Winston Churchill, when in hell, just keep moving. Certainly it's a view that I have. And Tricia, I helped when I was in a previous employer through the Christchurch earthquakes. I know waiting for perfect information to make a decision can at times be far worse than getting enough of the right information and making an early decision. And I certainly think for our clients and for consumers across the country, I think we need to be in a position for all the businesses that are on the call today where people have comfort in the discomfort of making decisions around your businesses with the information that you have as quickly as possible, because this is a period where rapid change needs rapid responding to.
Fantastic. Well, that about brings us to time. In terms of a wrap-up through the strategic issues, that's been fantastic, and I would like to thank each of our speakers, Tricia, Tony Dench, Tony Weiler, and Tony Arthur for joining us. And I'd like to also encourage you to come back for the next one of these sessions, which I think will be on Tuesday, but more about that from Richard. Thank you.
Thanks, Russell, and thank you to the panel, and thank you to everyone for engaging in the discussion. Awesome stuff. This is first on this many people and with this many people on the panel. So we'll obviously take some feedback and look to do Tuesday's one and learn from today. So thanks for the feedback on that. Just to the question around engaging with regulators, we've been very engaged with regulators and government. We are hoping to have a conversation like this as a reprise of our panel one from Get in Shape, to have both the FMA, MB and the Code working group together. They are keen to do it, but it's more likely to be sometime in May. So stand by for that one. And on that note, be safe, enjoy your last couple of days, not going anywhere. But hey, I feel like we're all going to want to break out on Tuesday and at least bolt down to the local takeaway and get some food that somebody else made for us. So enjoy that moment. Happy Anzac Day, and poll is on the screen as we speak. So tell us what you reckon, and we'll look to craft sessions that are relevant, meaningful, and purposeful. And on that note, have an awesome weekend. Thanks very much.